Welcome back to Your Average Investor, the channel that looks at my journey through investment, budgeting and finance. In today's video, we're going to look at something called an ETF. Now, an ETF can give you excellent levels of diversification with just one investment. So for a beginning investor out there, it can be a great place to start because whilst you're getting yourself into the stock market, it also protects you by fully diversifying your portfolio. Then we're going to take a quick look at my Vanguard portfolio, as there's been quite a lot of movement in the stock market over the last few days.
An ETF, or an exchange-traded fund, is a collection of securities that often tracks underlying indices. As with other securities, these are traded live on the stock market. ETFs can contain many types of investment, including bonds, stocks, commodities, or a mixture of all of them. Because ETFs commonly track indices or a collection of companies from a certain sector, they usually have high levels of diversification, which makes them a perfect place to start as a beginner investor. Instead of having to research a number of different companies before deciding what's the best investment for you, you can instead invest in an ETF, which tracks a market's growth over time. This makes your job a whole lot easier, whilst also reducing the level of risk you're taking. Some ETFs also provide a dividend, which increases the level of income to your portfolio. This can then be reinvested or withdrawn as income. Personally, I decide to reinvest them to help my portfolio grow quicker. Some of the most popular ETFs are the Vanguard S&P 500, the Vanguard FTSE 100, and the Invesco QQQ or Nasdaq index. Each of these ETFs tracks the performance of the underlying indice, and therefore, if the index increases in value, so will the investment in your ETF. Here we have Vanguard's FTSE 100 ETF. The FTSE 100 is a collection of the largest 100 companies in the UK, organised by market capitalisation. This ETF essentially tracks the progress of that market. Essentially, you're investing in the 100 companies within the FTSE 100. If a company falls outside the FTSE 100, that will then be replaced with the new company within the FTSE 100 within your investment ETF. This level of diversification protects your portfolio, and it ensures if one company performs poorly, the whole value of your investment will not be affected. We can see that this ETF has an ongoing charge fee of 0.09%, which means for every £1,000 you have invested in this ETF, you'll pay just £9 per year. The fund is also reasonably priced at just £26.73 per unit. By looking at the portfolio's data, we can see where the investments are actually made, in this case 100% within the United Kingdom, as it's the FTSE 100 tracker. We can also see the weighted exposure of our investment to different markets and sectors. In this case, financials makes up 19.1% of this ETF, with technology a small 0.6%. If we look further, we can see the individual holdings within this ETF, and we can see the weighting of each individual within the fund. Some of the pros of ETFs are the level of diversification that they offer, enabling you to invest in a large amount of companies with one fund. This also reduces the risk you're taking by investing in a number of different companies rather than just one or two. This means that your money is further spread, ensuring that if one company performs badly, your overall investment will not be hit too hard. Another advantage is ETFs are commonly quite low cost if they're not actively managed, especially in the case of Vanguard products. You're also saving time by not having to research individual companies and reducing risk by not having to invest in a single company. And while your investment will only track an index's performance, not beat it, whereas a company might do, you will never get a lower return than the index has performed at. On the other hand, if you decide to invest in an ETF within one sector, you lose some of that diversification, and if that sector performs poorly as a whole, your investment could be hit. Equally, in certain ETFs which are not as popular, they do lack liquidity sometimes. Now, if you're investing through a large company like Vanguard, that's very unlikely to happen. It's the smaller ETFs that are subject to this. Apart from that though, ETFs are an excellent way for a beginner to start investing. They were definitely the route that I went to start with. This is because of the ease, the diversification, and the confidence that it gave me to invest in lots of companies rather than just a select few. Some ETFs also pay dividends, which gives you a nice income into your portfolio. As I've already said, this can then either be reinvested or withdrawn as income. If you want to take maximum advantage of the compounding effect, you should consider reinvesting these dividends. This will be able to increase the speed at which your portfolio grows, which in turn means you'll be able to make more dividends, which then in turn means your portfolio will grow bigger, and so the effect snowballs. In the case of Vanguard's FTSE 100 ETF, the yield of their dividend is currently 5.73%. Let's take a quick look at my Vanguard portfolio then, which is made up of predominantly ETFs with the addition of one Vanguard Life strategy. Since my last video, my personal rate of return has increased from negative 5.25% to positive 2%. This is largely due to the market rally earlier in the week, in which most of my ETFs increased in value by about 3%. The overall value of my portfolio has increased by about £150 as well, which is really pleasing to see. You can see that my order for the Life Strategy 100 has now settled, meaning that the £50 I invested in the previous video is now invested. By looking at a breakdown on the month, we can see that this month's been particularly good, with a market gain of £116 so far. This month is therefore the second highest in terms of capital gains within one calendar month. However, there is still about a week of trading left this month, so all that could still change. We can see that my investments have now returned to me £29, and by scrolling down we can look at this on an individual ETF basis. One key thing to note here is that the Life Strategy 100 is now yielding a positive rate of return. Come the end of this week, I will have been investing in the Life Strategy 100 for a whole calendar year, so it's pleasing to see that I'm actually generating a positive rate of return rather than making a small loss. Equally, my rate of return for the FTSE 100 has moved from negative 26% to negative around 18%. This is quite a large jump for just 3 days trading. All of the rest of the ETFs I'm currently invested in are performing particularly well, considering the current global economic climate. Now let's see how that looks on a graph. We can see that over the weekend, nothing changed the value of my portfolio, and then Monday was a particularly good day for the stock market, and it saw the value of my portfolio increase by around £90. Then there was a smaller dip on the Tuesday, where it dropped by about £12, and obviously yesterday, Wednesday, was another strong day for the stock market, with it increasing by about £23 again. Overall then, we've had an increase of about £100 to £110 in 3 days of trading this week.
As you can see, there's been quite a lot of movement in my portfolio over the last few days, which has steadily increased the overall value of it, which is excellent news for me. Hopefully this means I'll finish my first year of investing with a positive rate of return. As you've seen, my entire Vanguard portfolio is made up of Vanguard ETFs, which means that I'm tracking the market's progress over time. While this might not give me the advantage of investing in individual stocks and getting a massive price increase if the company performs really well, I equally don't get the risk side of it, by one company performing particularly badly and that really impacting the overall value of my portfolio. In future videos, I'll show you my Trading 212 account, which I've just started, and that's starting to build a small portfolio of individual stocks and shares. These are companies that I think are going to stick around for a long time and will slowly increase in value through that period. I started to venture into individual stocks as I started to get more experience in the world of investing, and I did this through investing in ETFs. And hopefully this video has helped you understand a little bit more about what an ETF or exchange traded fund is and the purpose of them. If you did find this video useful and understand a bit more now about what an ETF is and some of the benefits of investing within an ETF, please do like, comment and subscribe. This will help you get notified of when I'm releasing new videos, and I'm going to be releasing one in the next few days that should help you all earn a little bit of extra money. If earning a bit of extra money that you could then go and invest into the stock market sounds like something you might be interested in, just tap that subscribe button so you'll get a notification of when I release it. And with that said, I'll catch you in the next one.